Hi everyone, Ira Coiner, the original IRA here from Triathlon Partners TV. Today, I want to go over some of the structured notes that are being issued for April 2025. I think this is a great time to really consider them because the market has collapsed and people will maybe have some money on the sidelines, maybe a little ambivalent about putting the market to work because they're not sure if this is the bottom. Well, these are structures that give you some leeway, and you don't have to guess exactly where the bottom is to still maximize your profits. Now, I'm going to go over three types that are really great right now. And number one, we have some that based on the equity performance. So the equity has gone down, right? And these will pay out based on the performance of different equity indexes. Now, they're about a year long. And if in a year's time, the market is greater than 70% of its current level, that means it could still drop 30%. You get a coupon rate like a bond. So for instance, in that example, you can get a 9.5% rate, even if the market goes down 30%. The market goes down more than 30%, you're on the hook 1-for-1, but that's like you're being long equities. But do you think the market's going to go down another 30%? That's up to you, but 9.5% is double what you're going to get in a bond. So this is something that's very interesting to replace your fixed income exposure with a structured note. The number two that's out there, we have some international plays, which international is always something that that's good for a diversified portfolio. Unfortunately, I think the standard ETFs and mutual funds don't really pay you for the risk you're taking, or in other words, you can get better terms in a structured note. Now, we have ones that are 30%, the same 30% barrier, but if it's greater than zero after 5 years, you get 2.6 times the return of these indexes. They're big indexes, EFA, top 50 stocks in Europe. So these are things that you are going to want to have in your portfolio. Anyway, getting a 2.6 multiplier times their return is fantastic. You can't go wrong. Or if you're on the sidelines and you don't want to even take a loss, they have 100% FDIC insured on the principal on a different note, and you get paid 1.9 times the gain on these indexes. So from that standpoint, ones with no risk, ones with more risk, and you see that difference in the multiplier. All right, number three, we got ones that are solely on the U.S. market. We got things that are growth, right? So we have one that on several U.S. indexes, right, over 3 years, a little bit longer term, right? And we have that 30%, if it's down 30% after the 3 years, you get 100% of your money back. But if it's greater, you'll get 1.7 times the return, right? So this is something you're looking to buy. And if you buy regular equities and they go up, you're going to get a 1-to-1 performance. These are giving you a 1 to 1.7 almost performance. So this is really good, really important. And if you're sort of concerned about having some risk and you want to minimize them, there's one out there this month that you take the first 5% loss, and that's the max loss you can have. If in 3 years' time, the market goes down, it goes down 10%, you're only down 5%. It goes down 20%, you're only down 5%. And if it rallies, you get a 1.3 times the performance. It's better than 1-to-1. And if you're going to start buying equities now, you might have a 5%. You're not going to pick the bottom. So from that standpoint, this is another example of something that fits your risk, could fit your risk profile, give you upside returns greater than 1-to-1 and protection on the downside. You are not getting that in your traditional ETFs or mutual funds. All right. Thank you very much for tuning in. This is Ira Coiner, the original IRA. Please give us some subscribers, give us some thumbs up, and more importantly, check out our live seminar Monday, April 28th at 7 p.m. Check us out. We'll put the details in the comment section as well. Check out our Facebook page, and you'll see the invite right there. All right, take care. Have a blessed day. Bye.